If you can't put it on that side of your phone.
Yeah, I see.
That's some dexterity.
All right.
This name like this.
Right here, sir.
He'll just. Got it. It's already, I think it's 5 minutes.
Go ahead and start now. Good afternoon, excuse me, good morning. Members of the Board of Finance and guests and members of the press. Seeing a quorum, I hereby call this meeting of the Board of Finance to order. The first item on the agenda is the adoption of the minutes from the February the 16th, 2023 meeting. The minutes were provided to you by email earlier, and are there any corrections or additions to those minutes that someone would like to know? Seeing none, I would entertain a motion for the adoption. Got a motion?
Second.
And a second. All those in favor say aye. Aye. Any opposed? Okay, let's move on now. The next item is the presentation of the treasury, and I'd like to recognize Eric Munson, Chief Deputy Treasurer. Eric?
Thank you, Mr. Chairman and members of the State Board of Finance. Before we present our report, today we have a brief video message from a special guest, Treasurer Mark Lowry. If all of you could play for us there. If we turn the volume up. Thank you, Treasurer Lowry. We're so glad that your recovery is going well and hope to see you soon. And again, the sound was a little better yesterday. We'll work on that. But the Treasurer's doing very well and we're speedy recovery. Again, the State Treasurer's Office serves as the state's bank, providing services for state agencies as well as local governments across Arkansas. The objectives of the State Treasurer's Office, our investment practices, in priority order are providing safety, liquidity, return on investment. I just want to make that clear. And before I turn it over, I'm just very proud of our team and staff for all the work that they've been through. And Will Cheatham, our chief, is here also, Smart Mission on video. We really have worked well this process, and again, we couldn't do it without this team. And I'm going to turn it over to Mr. Stephen Kilgore, our first presenter. He's our investment accounting director at CPA. And Stephen, go ahead and give your report.
Thank you. Well, good morning, Chairman Wolf, members of the board, and others in attendance today. Copies of what is being shown today are provided as printed handouts to provide the detail of recent investment trends and are also shown on the screens up there. So starting with page 2, it's shown the growth in ledger basis revenue from short-term investments over the last 3 months. That being the third quarter of this current fiscal year.
Stephen, Could you, talk to that microphone?
Okay. Sure. Page 2 shows the growth in ledger basis revenue from short-term investments over the last 3 months, that being the third quarter of this current fiscal year. Short-term investments earned $28.06 million over the most recent quarter. And on page 3 shows an upward monthly trend in earnings from long-term investments, which total $43.82 million for the last quarter. There was a month-by-month increase as interest rates were rising. The total of short and long-term investment earnings therefore increased from $59.2 million for the prior quarter to $71.9 million for the most recent quarter for ledger-based earnings. At the top of page 4, then, is shown the trend and the rate of return on the portfolio over the past 2 calendar years and entering into 2023. For the most recent quarter, the book rate of return was 3.02%, while total return, which includes market price changes, was 2.19%. The bottom of page 4 shows the investment results in terms of their accounting components. Figures for earnings on slide 4 are from a system that tracks daily amortization and accrued interest. The investment earnings over the past 3 months come to $75.2 million when calculated on that basis. Then if we go to the next slide, page 5, it's tracking the book rate of return alongside the trend in rates available on bonds available for purchase during those same years. Rising rates have boosted the portfolio yield as older bonds mature and the funds are reinvested. And our trend there is shown in red alongside the other rates. The next slide shows the allocation mix as of the end of March, with the largest grouping there in mortgage-backed securities. So we have mortgage-backed securities, U.S. agency bonds, money market funds, and demand deposit accounts, commercial paper, U.S. Treasury bonds, Arkansas municipal bonds, corporate bonds, and Israel bonds. Next, Senior Investment Manager Steve Pulley will have some additional summary comments. Let's see.
Thank you, Stephen. Chairman and Board, as Stephen mentioned, our Q3 return was above 3%, which that exceeded our projections of 2.8 to 2.9. Celeste Gladden, who runs our money market trust fund for the various entities, is getting above 4.75% for those entities that are involved in that program. And as the Fed continues to hike rates, we are seeing our liquidity portion with over $2 billion managed by Damon Dortch consistently get above 5% on our daily projections. So that's a way for us to really get some positive returns without having interest rate exposure on that. Last quarter was treacherous, to say the least, and to kind of give you an example, in March we bought a 2-year Treasury note at 5%, and literally within a couple of business days, a couple of trading days, rates had gone below 4%. I've been doing this a long time. That's a lot of volatility in the marketplace, which makes it difficult on us to find relative value when we're seeing that type of volatility. But that being said, the question's been asked, how is it that the banking crisis, I don't want to call it a crisis, we've had some banks that have gone under, some very large banks have gone under, how can they mismatch or mismanage their interest rate portfolio to the point that would be a contributing factor for their failure? And if you would go to the next slide in your packet, the last one, there's a table there that is the portfolio purchase composite. And if you go all the way over to the far right column where it says duration, duration is a measurement of interest rate sensitivity. And so when we have a movement in interest rate, it has a corresponding inverse relationship price. And for For our example, the portfolio, as you can see on a monthly basis, a quarterly basis, and year-to-date, what we have done on our duration scale. And the reason why I bring this up is if a failed bank had a duration, let's say it was 15 to 20 years, they had a much longer portfolio profile, their exposure would be 4 to 5 times greater than what we have. Ours is essentially 4, I think, in terms of 4 years. And the reason why I bring this up is because Robert and I are very mindful of the fact of maintaining a consistent conservative interest rate sensitivity when we purchase our bonds. Q3, we purchased $700 million worth of bonds in the portfolio with an average rate of return of 4.84. Year to date, so far this year in fiscal year 23, we've purchased over $2 billion that put it in the long-term portfolio with a rate of return of above 4.5%. At the end of Q2, I'd mentioned that our total portfolio value was above $10 billion. Well, at the end of Q3, our long-term portion of the portfolio is above $8 billion. And I say that because we feel very good about where we are in terms of our diversification, our liquidity, and our interest rate sensitivity profile moving forward. And with that, I'll turn it over to Robert. He's our other senior investment officer. I'll let him give you a market overview and economic overview, not to mention to set the quarterly returns for the upcoming quarter.
Thanks, Steve. Good morning, Chairman Walther and members of the board. With your consent, I will be setting the new target rate of book return value for the fourth quarter of 23. In the most recent FOMC meeting on May 3rd, Fed members unanimously voted to increase short-term interest rates by 25 basis points, bringing the Fed funds target rate to an upper bound level of 5.25%. This marks the 10th adjustment in the current hiking campaign, with many participants believing it will be the last. While statements made by Chairman Powell post-meeting leaned more dovish than in prior meetings, the decision on whether this will be the terminal hike will be conditional on incoming economic data, including the outlook on credit and inflation. Since March 9th, 4 banks have been lost, as Steve mentioned, 2 of which were ranked top 20 U.S. banks in total assets. This has created turmoil for the regional banking sector.
Hang on a second. Take this off.
We apologize, Mr. Chair. It's the first time we use the equipment in the room. We're getting adjusted.
Go ahead.
This has created turmoil for the regional banking sector and raised concern that a protracted recession may be unavoidable, leading the market to price in an abrupt end to tighter monetary policy and forecasting multiple interest rate cuts in the second half of the year. In contrast, U.S. payroll growth continues to be unwavering, averaging for the last 4 months. April unemployment fell to 3.4%, matching a multi-decade low. Additionally, while headline inflation has clearly declined, April's print of 4.9% and a 5.5% core is still too high given the Fed's preferred target of 2%. Given the Federal Reserve's main objective to reduce inflation, it's unlikely committee members will move to a policy pivot as is suggested by the forward interest rate curve. It is also doubtful the Fed will cut interest rates with unemployment at 3.4% unless these data points change abruptly. Given the current environment, interest rates likely remain higher for longer. We therefore are proposing to increase the target rate of book return value for the April through June period from a range of 2.8 to 2.9% to a new range of 3% to 3.1%. Thank you, Mr. Chairman.
Okay. Are there any questions for either any of the gentlemen? Okay. May I have a motion to set the target rate of return for the April through June quarterly period from a range of 2.8 to 2.9 to a new range of 3.0 to 3.1? that's the last part of, I guess, that concludes the treasurer's report, is that correct?
Yes, Mr. Chairman. And again, we apologize for the AV. We'll get it adjusted there.
Well, we understand.
First time.
This is the first time here. Can I have a motion for the approval of the treasurer's report?
So moved.
Have a motion, have a second?
Second.
All those in favor say aye. Aye. Any opposed? Okay, good. Okay, the next order of business are the quarterly motions for the first quarter of 2023, July 1st, 2023 through September the 30th of 2023. These motions were included in your documentation and for distribution. So as chairman of the Board of Finance, I make a motion to the board that no funds are available for deposit into the State Board of Finance Certificate of Deposit Program. Have a second.
Second.
Any discussion? All those in favor say aye.
Aye.
Any opposed? Okay, thank you. The next item is, as chairman of the board, the State Board of Finance, I make a motion, the board direct the treasurer of the state to purchase warrants for the succeeding quarter, that is July the 1st, 2023 through September the 30th, 2023, pursuant to Act N88 of 2013, and to keep reasonable amounts in demand deposit accounts and money markets during the next quarter for the transaction of the day-to-day activities of the state. May I have the second, please?
Second.
Any questions? All those in favor say aye. Aye. Thank you. Okay, we're now going to move to the state benefit division, employee benefit division items on the agenda. For presentation, I'd like to recognize Grant Wallace, our new director of EBD. Thank you, gentlemen. You got it.
Good morning, members of the Board of Finance. First up on our list of EBD-related items is the formally recommendations for the preceding quarter. In your packet, you would have gotten recommendations for February, March, April, and May. The only adjustment that we need to make at this time would be to the May formulary recommendation. We need to remove the drug Crimenza, am I saying that right? There you go. And that one has been put on hold for further evaluation. So with that, I would seek a motion from the board to approve the formulated recommendations for February, March, April, and May as amended.
Have that. May I have a motion, please?
Motion.
Second.
Second.
I have a motion, second. Are there any questions? Are there any questions? Hearing none, all those in favor say aye.
Aye.
Any opposed? Okay.
Okay, the two new contracts that we need to bring to your attention are in your packet. The first one is EBRX. This is not a new contract in the sense that they are an existing partner that we work with. This is just a new 7-year term that is coming available to them. This is an annual contract that's reviewed each year. What we have done with this one, because we do have a new PBM.
What page are we on? I've got tons of,
So this would be,
I feel like we can follow along.
Yeah.
this would have been in the updated materials you've got. It's labeled EBD, EBRX contract summary of cost by services. Is it printed out?
I'm not sure if that's something they got in their handout or not.
All I know is
Okay. So again, this is an update on an existing relationship. This is a 1-year contract. What we have done with this one, because we do have a new pharmacy benefit manager that we'll discuss in a second, we have amended this relationship to be more of a consultant to the advisory commissions and the State Board of Finance. when it comes to formulary recommendations, advising on network development, and helping us manage our PBM relationship. They will no longer manage the customer pulse center, and there is a wind down period for the prior authorization process as that shifts over to Navitas, and we continue to work on that implementation. So with that, I would need a motion to approve the contract for EDRX.
So moved. Have a second?
I have a question.
I'll ask you a question. Have a second? Second. All right. Any questions?
Grant, so what was our previous term on this contract?
7 years.
So it's, that
That
part
is
has not
done.
changed, thank you.
Yeah,
So it's over.
yes.
Any other questions? All those in favor say aye. Aye. Any opposed?
Okay, the next new contract is for, I'm excited to announce our new pharmacy benefit manager. A little bit of background, since the last State Board of Finance meeting, there were 2 protests on this award. The first protest was upheld in one part, denied in 2 parts by the state procurement director. We entered in a best and final offer process. And as a result of that best and final offer process, Navitas Health Solutions was still the awardee that we are anticipated. We're in the ATA part of the process with Navitas. But with that, we do have a July 1st start date on that relationship. So we do have before you the contract for approval with Navitas. So I would seek a motion to approve that so that we can continue to move forward with implementation and work with getting them to cover our prescriptions.
Motion, we have a motion. We have a second.
Second.
Are there any questions? Steve, have you found it? I'm trying, yeah.
It should be the next tab in that book.
Actually, Mr. Chair, I do have another question.
Okay. Yeah, I got it.
So great, this is a 7-year contract term as well.
So it would be for the 3 years with the 4-year options, and each year after that 3rd year to renew. Did I say that right? So you have the initial 3-year period, then we would have annual renewals each year after that for 4 years.
That are possible.
That are
That's
possible,
Noted on
yes.
page 2.
Correct.
What was our previous term of our previous vendor?
7 years.
Thank you.
That's typical. Any other questions? Hearing none, then all in favor say aye. All opposed? All opposed? Any opposed? Thank you.
Okay, the next item are requests for proposals. We're actually gonna pass over that at this meeting. These are more just FYIs that these are coming up and that at the next meeting, we will do some work on this. The third-party administrator, that relationship ends December 30th of 2024. That's Health Advantage currently. And then the actuarial services, Milliman, is currently doing that through a bundled service with Health Advantage. So my inclination is to pull them out and have a actuary that's not in the bundled service help navigate us through the RFP process for our third-party administrator. But again, at this time, we're passing over them and just for your information.
Anybody have any questions?
The contract renewals, these are for a 1-year extension, existing contracts. There are no price changes in either one of these. Connect Your Care or Optum, that is our HSA, FSA provider. So I'll need a motion to approve that renewal for 1 year.
Is that for Connect Your Care?
Yes, sir.
Do I have a motion, please?
Extreme Technologies. This is our technology partner, and they are the developer and maintenance group that navigates our AR benefits portal. That is the brain trust of everything that we do here. So again, that is for 1 year, no price changes, and I would ask for a motion to approve that renewal.
Okay, are there any questions? Yeah, motion, please.
Motion.
Have a motion and a second.
Second.
All those in favor say aye.
Aye.
Any opposed?
Okay, the last item on the agenda are benefit changes. These are updates as we reviewed our policy documentation that we needed to make to, in moving forward. The ground ambulance service, currently there is a maximum of $2,000 reimbursement. That's quite a bit higher than what the average is within kind of the industry these days. So we are recommending reducing that to $1,500 to get it more in line, with the intention to continue to work to bring that down to get it more in line with current industry standard. So I would ask for a motion to approve for the updates to the benefits around ground ambulance services.
Motion. Okay.
Do you have a figure on, an estimated figure on what the current industry standard is?
It's somewhere between 750 to 1,000 is what I was told.
Thank you.
Motion?
Follow up.
Oh, question?
So is that average, is that nationwide, or is that an average of carriers in the state of Arkansas that service our community?
In the state of Arkansas.
I have a question. So we don't see any balance billing in this, where this is a network situation where the person will not be balanced billing more than that?
Correct.
Any additional questions? Motion?
Motion.
Have a motion and a second.
Second.
All those in favor say aye.
Aye.
Any opposed?
Okay, the last item is an update to the bariatric surgery eligibility. So we ran into a situation where currently the way your insurance works right now, that if two married individuals work for the state or work for a public school and they're on the same health plan, one of them is the O1 in your insurance. They're the one that's the primary holder of the policy. The spouse then becomes a dependent, technically, under the plan. So the way that the rules were written for bariatric procedure, that spouse, who is a state employee and would otherwise be entitled to the bariatric surgery, was not eligible because they are a dependent underneath the plan. So therefore, they would have had to, during open enrollment, either swap to become the O1 on the plan or break up the family coverage and get their own individual coverage to be eligible for the bariatric procedure. That just seems like a lot of bureaucratic red tape. So what you have before you is opening it up to allow a spouse who is a state or public school employee and would otherwise meet all the other eligibility criteria would be allowed to receive the bariatric surgery procedure as they would if they were the O1 on the insurance policy. So with that, I would entertain a motion to approve that benefit update.
Do you have any questions?
Questions?
Please.
Grant, I thought at one time, there was a law that said if there are two state employees, they each had to have their own independent coverage. Is that was not accurate?
I think you might be thinking of if a employee, we do not cover someone who has health insurance available through their other employer. But no, there's nothing around forcing two state employees to have their